All right. Welcome, everybody. Today we are joined by David and James from the Car Crowd. These guys bring a really cool and unique investment opportunity in the classic car market, specifically with Ferraris. And this is a curated collection of iconic Ferraris that we are calling the Ferrari Collection. We're excited to bring this to you and to go over this opportunity with the guys here today. The strategy here is interesting. It's both appreciation potential, and there's also some arbitrage going on, a market difference between the UK and the US, and we're going to learn all about that. But this is a real great chance to dive into the luxury collectible car market with a solid foundation. So, Dave and James, welcome. Glad to have you here.
Thanks, Stefan. Nice to be here.
So,
Thank you.
before we go into the Q&A, would you guys just want to introduce yourselves real quick and tell us a little bit about your background?
Yeah, so just quickly, David Spickett, CEO here at the Car Crowd. Started Car Crowd in 2019. Since I was about 4 years old, I've had a pretty big passion for cars. Myself and my dad have had our own private collection for sort of over 20 years. I've been trawling around motorsport tracks and auction houses and stuff like that for lots of years in my sort of personal life. But I've been really in financial services and management consultancy in my professional life. So when the opportunity arose after I saw Rally Road in the US, actually, who were doing cars initially in 2019 or before that, I thought it was a fantastic opportunity and something we didn't have here in Europe, and therefore wanted to bring sort of fractional ownership or syndicated ownership of collectible cars over to the UK and to Europe. And now it's a great opportunity actually to go back over and sort of release some of that stuff back into America as well, which is a really exciting opportunity.
Very cool.
Brilliant. And then my name's Jimmy. So my role within the Car Crowd, I've been here 6 months now, is really around sort of forging those relationships and helping the Car Crowd reach out to more parts of the globe and to more people that I guess don't know about this opportunity to invest in cars and to realize the incredible returns that they offer. Especially in the current climate with lots of different changes going on in different countries. There's lots of opportunity to make some really good returns with some exciting assets, especially ones that, a lot of people might have had on their walls when they were kids. So it's something that, we're really passionate about, and it's a very good opportunity for people right now.
Very cool. Glad to have you guys here. And yeah, we'll go into the returns and the risks and the costs in a bit. But first, let's talk about the cars themselves. So there are three cars in this Ferrari collection we're putting together. They are a 328 GTS. We've got a beautiful Testarossa. That's my personal favorite, not from a return standpoint, just from a sheer beauty standpoint. I love those cars, man. And then a 355 Berlinetta I'm not as familiar with, but obviously it's a beautiful car as well. So what can you tell us about the rationale behind these chosen Ferrari models? Like, why these ones specifically?
Yeah, there's a bit of a story behind each of the cars. So you can see actually there's 328 just behind me here, which we'll start with. The 328 is an interesting one. That's as you mentioned at the start, they're called the arbitrage style play. And actually, in the 308 and 328 generations of the Ferrari, there was a lot of emissions restrictions for US cars, and therefore they were choked back, had sort of lower power, but also had safety features like big rubber bumpers that were placed on the front, which affected the styling and the look and feel of the car. So the European specs cars have been quite sought after and quite in demand for a fairly long time. And as the cars reach 25 years old, the market opens up for them to be imported into the US. And that's actually created quite a buzz and a stir. And obviously those cars have been over 25 years for a few years now. So there's an established kind of collector's market for both the 308 and the 328 in the US, having featured in Magnum PI and the 328 featured in Beverly Hills Cop. So there's quite, notoriety for the car over there where you are. And also, we're sort of seeing that the European cars are the ones that are in more demand. And obviously we have access to those being here. And that's where that arbitrage play comes in, that we can access the left-hand drive cars or variants of the 328 here in the UK, and then be able to move them onto to the US. In terms of the 355, that's a slightly later car than the 328. So there was the 328, 348, then the 355. This is really the last hand-built Ferrari. That's the kind of rationale behind that. It was the one that was the last one built in Maranello. It's very raw still in its driving experience, and the first time that Ferrari introduced an F1 gearbox or the flappy paddle gearbox. So although there's 50% manual, 50% flappy paddle F1, the manual cars are where it's at. They're really, really sought after, because after this generation, Ferrari really started to mix the production far more towards that automatic and I guess less engaging driver experience. So the manual car with the 355 is really starting to sort of shoot up in value. It's got a fantastic appreciation story after the last few years, and again has that film pedigree, especially within the James Bond franchise, being the one that Xenia on a top drove in GoldenEye, being chased by the Aston Martin DB5. So another very famous kind of Ferrari, and in the right spec with red and black interior as well. So that's the 355, and then behind me on this side is the Testarossa. The Testarossa is the iconic movie car. It's the poster car of almost every kind of 35 to 45-year-old guy's walls. And obviously Miami Vice fame initially with Don Johnson in the white car, and then more recently in Wolf of Wall Street as well. These cars they just don't go away. Everybody loves them. It's a much more kind of grand tourer, really, rather than the sports car versions of the 3 Series Ferrari. So it's got the flat 12 engine. It sort of powers along and purrs along with lovely speed and pace, and is actually a very, very easy to drive, very well built car. The Lamborghini Countachs, which is a similar generation car, have now started to see values increase into the $1 million plus. The Ferrari Testarossa, we feel, is a really good idea, because it's slightly behind that curve. So over the next couple of years, which is why we've got a bit of a hold period, the interest has already started to gain momentum in the 512 and now into the Testarossas as well. And we think that's the really good play in terms of following that Countach curve, as those people that are nostalgic and want to get into something they have on their walls start to go and buy these cars up and really want to take the supply down with very high demand.
Awesome. Well, let's talk about the supply and demand real quick. So obviously the supply is extremely limited. What are you seeing on the demand side? How is the demand? What have you seen in terms of like demand shifts for classic Ferraris from the 80s, from the 90s? Over the past few years, what does the landscape look like right now?
Yeah, it's really interesting. We've seen a real drop in attraction for things like some of the earlier cars. Some of the 50s, 40s, 50s, 60s cars are actually starting to diminish now in popularity. And that's, I think, really due to the demographic of people loving those cars when they were younger, sort of dying out, unfortunately. And actually what's happening is the people that loved these cars, the people that are now in their 40s and 50s are going out with a bit of spare capital. Kids may have gone off to college or whatever, and they're sort of sitting there thinking there's an itch to scratch. And therefore, as you say, they're not making these anymore. So the supply is very, very limited. And therefore, the demand that's coming through of that generation that are coming into that capital, either be it, as I say, in the 40s and 50s or even at retirement age, is meaning that the 80s and 90s cars are becoming incredibly popular. And then, just finding a really, really good one is really the key. And that's where we come in kind of as the experts. We trawl the globe really from a curation perspective. Both the 328 and the Testarossa are Italian cars coming in from Capaldi Autos in Italy. The 355 here as well. We've sourced sort of fairly locally actually in the UK, but we're able to source, I guess, the right car with the right history, the right mileage, and the best chance, therefore, of appreciating as well. Because if you do want to go out and buy the car and post a car of your childhood, you want to buy the best example, and I think that's where we can come in to try and find that.
Well, what does that appreciation look like in recent years? Like what can investors expect roughly year over year in terms of just raw appreciation on these particular vehicles?
Yeah, I mean, obviously there's no guarantees of returns, and the past figures are great to look at, but they don't guarantee the future predictions. But we've seen a fairly steady between 8, 12, 13% increase in values, depending on which make and model you look at, and depending on which year. This year is a softer year, so it's actually a very good time to buy. We've actually seen a slight decrease in 2024 for a lot of the sports cars, not just Ferraris, but across Lamborghinis, Porsches, etc. As the whole market, I think, globally, is kind of going through some financial difficulties, lots of political turmoil, obviously, with the recent changes in the US as well, and the recent changes here in the UK. So there's going to be a bit of a price correction, I think, this year, which is quite good for us, obviously, at the time when we're acquiring. And then that's going to stabilize up, and I think we'll start to see into that low teens, mid-teens growth over the next few years, as well as then the arbitrage play of the value difference between the UK and the US.
It's so funny. Before we talk about the arbitrage play, I just want to take a quick note on just the 80s design, because it's like, I think about the 80s culture a lot, nostalgia quite a bit. And there's so much in the 80s that it was just, that holds up very well over time. We're seeing this now today in a lot of the retro revival and this and that. But cars, a lot of 80s cars look like garbage. Like, let's just face it, right? Like they don't hold up well, but the supercars really, really do. And the Ferraris especially do. And I know this is maybe a little bit outside of the discussion, but I just think it's fascinating how well they really have held up over time. They really just look phenomenal today.
Yeah, and I think just as a quick, I mean, I don't know whether this is normal on a normal chat, but just to say these aren't a wallpaper, just so you know, it's not like just an impressed background. These are the cars. So there's the Testarossa, which, as you say, they don't make cars like that anymore, especially not with the wedge shape at the front and the pop-up headlights. The safety laws and all those sorts of things have really changed how people design cars nowadays. Much more curvy,
Right.
much more safety. These things are, they're designs that don't age in our opinion. We love them. Every single one of them is brings its own little quirks, and as you look at it in different angles, they do really, get you excited.
Yeah, they look cool today. Exactly. Let's talk arbitrage. Okay, so what is the kind of general arbitrage plan? So you're buying, they're acquired in the UK. They're left-hand drive. They're worth more because they're left-hand drive models, and they're sold in the US. Is that correct?
So they're worth less in the UK because they're left-hand drive models. So we
Yep.
obviously have right-hand drive cars over here. There's a number of cars over the last 30, 40 years, depending on how old these are, that have been imported by Italy, Germany, whatever. As dealers didn't have enough allocation, they may have imported European cars to meet the allocation, but obviously the owner would have to sort of sacrifice the fact that it would be a left-hand drive car. So there's a number of left-hand drive cars here in circulation. And we tend to see the market in the UK for those left-hand drive cars being a bit softer. They're normally 10, maybe 15% under for an equivalent right-hand drive car, just because we're a small country, and therefore there's limited supply with big demand. Everyone wants the right-hand drive cars, so the left-hand drive ones are just slightly better value, I guess. In terms of the some cars like the 355, which was actually designed to be a left-hand drive car, and then for the right-hand drive variant, they really just switched over the steering wheel and then put a cable through to the throttle. So actually, the driving is almost simulated for a right-hand drive version. So the left-hand drive versions are actually the purest. They're the real, the original way that Ferrari had designed it. Those left-hand drive cars, are accessed in the UK, slightly under market value for a right-hand drive car. And then there's an arbitrage play that means we buy them slightly, under market value. And then in the US, as I said before, those European spec cars are the ones that are more sought after and desirable. So, we then get them over to the US and we see the price difference there being as much as up to 40% for some of the 328s in terms of what's currently available on the market today.
Oh, wow. Okay. So so in real terms, let's talk what that arbitrage looks like. So,
Mm-hmm.
you use some terms slightly less. Wait, can you quantify like as specific as you can in real terms, what that looks like?
Yes, I'd say we're looking at around a 10%, access point for us for a left-hand drive car versus a right-hand drive car.
Okay.
And then say the difference. So Testarossas are actually fairly on a par, but the Testarossa has been picked more for that appreciation curve because we think that's going to really start to fly soon. But both the 328 and the 355 as well, somewhere between about 20 to 40% in terms of the difference for a good manual low mileage car in the 355's case. And then obviously a European spec, no rubber bumpers, full power delivery, etc. on the 328 side. It's always going to vary, but that's where we're seeing it between that 20 and 40% mark.
So when it comes time to sell, so first of all, this is about a 4-year hold we're looking at, right? Correct?
Yeah.
Okay.
Selling the 4 year, yeah. So 3-year hold, selling to the 4th year, yeah.
Selling, okay. And so, first of all, actually, let's talk about why that is. What's the rationale for for that time frame?
So again, we talked about the market. I think that for us, it's a good time to buy at the moment, but the market globally is flat. I think it's going to be a 12 to 18 month period where that market will then start to come back up. We want to then have a bit of appreciation on the cars. I think especially for the Testarossa, the popularity is really growing and it's following in the footsteps of the Countach in terms of the appreciation. So I think it's a good idea to kind of make sure we've got that global stability before we look to sell. What we don't want is to look at trying to import to the US and then having these sort of pricing spikes. We don't want to get there at the wrong timing. Basically, we want to make sure the timing is correct. And that just gives us the opportunity to pick and choose exactly the right moment when the market's recovered and when we can get into the US for the maximum returns.
And then that's a great follow-up question. So, let's talk about like what is the exit plan, if the market conditions aren't favorable after 3.5 years, is there flexibility in the timeline? We don't really know what the world's going to be like 3.5 years from now.
Yeah.
How are you kind of thinking about the exit strategy and the flexibility around it?
Yeah, I mean, we are completely flexible in that sense. We obviously do market analysis on a monthly basis. We have over 80 cars under management here, and we look at supporting our investors no matter what it is in terms of their right exit strategy for whether it's a Ford or whether it's a Ferrari. For us, it's all about making sure the decision making is based on data and analytics and where we think the right time to sell is. With the cars like these, they are more resilient to market trends than others because they are so low mileage and in such low supply. So there is, definitely a bit of resilience already baked in to that investment case for some of those. But if it looks like the market is completely flat in 3 years, we're not going to force the sale and say, right, we've got to sell them. You can see the facility here. We've got 4 sheds. We call them sheds, barns, just like this, where the cars are safe and they can be stored for as many years kind of as required. Without having huge asset under management costs as well. So if we need to wait a further 12 months to get the market back to the position we would think is the right time to exit, then that's perfectly doable.
And in terms of assuming market conditions are normal or hopefully, right for a sale, would you consider selling before that 3.5 year window?
Yeah, absolutely. And again, although it's a collection, if there's an opportunity that the 328 someone wants to import the 328 and pay, a really good amount of capital, then that is also possible. So yeah, we can absolutely respond to demand in that sense. And if there is an opportunity that needs to be realized, then yeah, absolutely 100%.
Yeah, and that's definitely a discussion that we'd love to have if you get an offer, in a shorter amount of time. That's definitely something I think people would love to entertain, having that option. But I think that makes sense. About 3.5 years, 4 years, you are going to look to sell, and the way you're going to sell is what, through traditional car auctions, or are you doing private sales, or like how are you thinking about how to actually make the sale?
Yeah, we're thinking about putting them in as a collection. I mean, that was the ideal plan A, as very low mileage, very sought after, red on tan or red on black Ferraris, with into an auction like the Monterey Car Week, potentially like Pebble Beach. So, just recently, for example, Sotheby's and Sholto Gilbertson, who's a friend of ours, has sold the Ferrari F50 for the record amounts of money. So consistently, you see that auction setting records, and I think it's because it's where people are starting to go in order to buy the best of the best in terms of the Ferrari world. And that's kind of what we're looking at curating, and therefore that's what I think will be the first call for our exit.
Yeah, cool. And in terms of the actual time frame of selling, you were thinking about from beginning to end, the process takes about what, 6 months, that area?
Yeah, around about 6 months. Yeah. We'll probably start to look at it actually earlier than that to start to ship the cars over. If the auction route, for example, is plan A, then obviously we do it in the timelines for the auction because the cars need to be over there and then inspected, etc., and set up at Pebble Beach. But if we're doing it, we have other options in terms of distribution as well. So we have a guy that we work with in the US who can has a sort of a garage and a storage area, so we can store the cars in the US as well. If required, and then sell them through a dealership network as well. So there is other options on it, but I think the plan A is to get them there around about 4 to 6 months before the sale, and then let's sell them via the auction.
Cool. So this all sounds great. Now we're talking about projected 19 to 24% annual returns. Obviously, there's no guarantees, there's no assurances, but that's basically what we feel comfortable, telling investors. What are your thoughts on that?
Yeah, so I mean, our collection to date for the last 3 or 4 years of the car crowd's cars as returning 15.6%, which is a strong sort of return and obviously something that we're confident of achieving, and that's across a mix of 38 different assets. With the Ferraris, we've obviously handpicked them for a reason, and obviously we're hoping to see that teams-based appreciation year on year, with the Testarossa, I think, going maybe even higher than that. But then also we have the arbitrage on top, which then draws that year on year appreciation up a little bit more because you factor in the arbitrage amounts as well on exit. So that's the numbers we're aiming for, and I think so far the data we've seen over the last few years, both on our own collection plus these cars behind us, supports that story.
Cool. And last but not least, let's talk about risks. What do you guys see as the biggest risks to this investment for investors?
Yeah, I mean, collectible cars are a fantastic, asset class because it's asset backed. We do have that nature behind us. They're all stored, insured, and maintained here. As you can see, within very good facilities. We've got full police collected alarms. We've got all the cars fully insured. So all of that risk, if you like, in terms of the actual condition and storage of the asset is kind of taken care of. The main risk would obviously be in the market and how the market moves. We have seen price crashes previously in 2008, for example, with some of the cars, but yet collectible cars actually, according to the New York Times as well, was one of the most resilient asset classes against what was a global economic crash as well. So, obviously we can't predict market conditions, but that would be the only or the main risk, if you like, I think, in terms of us achieving the appreciation targets that we've set.
And there's also some exchange rate considerations as well. I wouldn't necessarily call
Sure,
it. It's just, we're talking about, we're buying in pounds, we're selling in dollars, so that can be beneficial as well.
sure, exactly. Yeah.
So what does a worst case scenario look like? I mean, it seems pretty straightforward, in terms of, look, the cars are insured, they're not going to go to zero. There could be a market crash. We're under no obligation to sell in 4 years if that does happen. It sounds like, I don't want to put words in your mouth. It sounds like the worst case scenario is like we have to end up waiting a few more years for a correction to correct. Is that fair, or what's like the worst case scenario in your mind?
But that's very fair. Yeah, I think that's exactly right. Just effectively a patience aspect is kind of what would be needed if it is not the right time to sell. Wait another year or another 2 years. So there's the additional cost, I guess, of the asset under management charge for those 2 years to consider as the biggest risk. But then, as you say, you're not going to ever see these cars go to zero. I think we can all be pretty confident of that. And over the last decade, every single one of these has been only going up. So, it is fully asset backed. They are fully insured. And I completely agree with you, Stefan. I think the only risk really is if we have to just wait another year or two when we get to that fourth year, just in case the market's not right.
Good. Yeah, I agree. I like the numbers. I think this is definitely something we're excited about. On a personal level, I'm excited to have bragging rights to talk about the fact that I own a sliver of some of the most beautiful cars in the world. I think it's a great deal, and we're excited to bring it to the community. Any final comments you guys want to make about this collection?
Sorry, go on.
I think from my point of view, I think just to remind people that the insurance is in line with market valuations as well. So they're not insured at the value they're purchased at. The insurance is remeasured on a regular basis to make sure that, as that growth goes through the period of time that, let's say the 3 years, how often do we do that, David?
Every quarter.
There you go. So every quarter there's a readjustment in the insurance value. So that, for that risk and that protection, that's also there to back the asset as well.
And so you'll be revaluing, basically updating the asset value at each quarter for the investors?
Correct. Yeah.
Based on recent auction data, based on audits or auction data, or?
Yeah, we do valuations based on Haggerty's values. We do Classic.com, Classic Valuer, and Glenmarch. We take the auction data pretty much, therefore, from those sources, which does all the global auctions. We then look at benchmarking the average price in the market at that point, and then we'll benchmark our asset or the alts assets, the collection, against that benchmark. So if, for example, ours has got lower mileage, we would obviously increase the valuation a little bit because ours has got lower mileage than the average car. So we take into consideration all the different factors to make it quite a scientific data-led valuation. And then, that valuation will then be benchmarked against the live cars in the market today, so that we've got an accurate director's estimate of the valuation, and then we'll supply that in to communicate that to all of the stakeholders within the collection.
Fantastic. Well, David, James, we like this deal a lot. Thank you so much. It's an honor to work with you on this one. I think it's really exciting, and we look forward to getting this live. So thank you guys once again.
Yes, thanks so much. Cheers, guys.
Thank you.
Bye-bye.